Hi, my name is Lisa Broadbent-Diassi, and today I'd like to talk to you about homeowners insurance. Buying a home is the single largest investment that most people make. Your main line of defense in protecting that investment is homeowners insurance. There are different homeowner insurance forms that will provide coverage for damage to your home and to your belongings caused by different perils. One form is the basic form, and it covers very few perils. Broad covers more perils, including everything that the basic form covers. And then there's the special form, which covers the most perils. You'll want the special form because the difference in the premium really isn't all that much. It's definitely worth getting the additional coverage. Now let's talk about the major coverages on a homeowner's policy. Let's start with the dwelling amount. This is the coverage you'll need to rebuild the house. The market value is different from the replacement value, and you should make sure that your policy includes the wording guaranteed replacement cost. You will need to be careful here so that you're not underinsuring yourself. That's because most policies contain the verbiage that limits a claim on the dwelling by a 20% increase over the insured's dwelling amount. What do I mean by this? Here's an example. Say you purchase a house for $100,000, which is the market value, but the cost to rebuild the home is $150,000. If your house burns to the ground, you will only be insured for $120,000, and you will have to come up with a $30,000 difference. That's a lot of money to come up with at the time of a claim. The only way to avoid this situation is to have a pretty good idea about the true replacement cost. So how do you figure that out? Ask an insurance agent to construct a replacement cost value. Also, look at the cost to rebuild a new home comparable to yours in the area. You should note that the replacement cost only applies to what it would take to rebuild the home. It does not include the cost of the land. If you don't have replacement costs on your policy, then the dwelling amount and/or its contents will be covered for actual cash value. This is the replacement cost minus the depreciation, which is a percentage for every year of the age of your home. Here's an example. If you purchase a table for $500 5 years ago and the cost for a new table today is $1,000, then 5 years times the depreciation percentage of 7% a year would mean that the table would be depreciated by $350. So the true replacement cost for the table is $1,000. But if you don't have replacement costs on your policy, the actual cash value would only be $650, which is $1,000 minus the $350 depreciation amount. Which would you rather receive? So make sure that you have replacement cost value on the dwelling and its contents. Now let's focus on contents. Everything inside the home that isn't attached to the dwelling. This is typically a percentage of 70 to 80% of the dwelling amount, depending on the insurance carrier. It's important to make sure that this value is set high enough. To figure out the correct amount of the coverage, you will need to estimate what it will cost to replace all of your belongings with new ones. I know that sounds like a very difficult task, but it's well worth the time that you'll put into it. Underestimating the true amount could cost you tens of thousands of dollars. You will need this list at the time of a claim. Again, always make sure that your policy includes the wording guaranteed replacement cost. Another coverage on your policy is other structures. This includes things like sheds, pools, and detached garages. Most insurance companies typically calculate these to be 10% of the dwelling amount. If this isn't enough coverage for your particular situation, then make sure you adjust the coverages. Loss of use is another type of property coverage. If you cannot live in your home due to a covered peril, then the insurance company will pay for you to live elsewhere while your home is being repaired or rebuilt. The coverage will also provide for incidental items such as toothbrushes, pajamas, meals, and other immediate needs. Now let's shift our attention to the liability coverages. The big one is personal liability. Someone comes into your house and falls down your steps and injures themselves, or if they come into your backyard and jump on your trampoline and fall off, or if your dog gets loose, runs down to a neighbor's house and bites them, your insurance policy will provide for a legal defense and settlement up to your personal liability limit. You'll want enough liability coverage to provide for all your assets. For example, if your assets, including your 401k, cash, and physical belongings, add up to $250,000, then you will want a minimum liability coverage of $300,000. Another consideration is an umbrella liability policy, which for an additional premium will cover all your underlying policies, such as your motorcycles, watercrafts, autos, and homes. This would put an umbrella over all your policies, and you can choose the amount of coverage that you want, $1 million, $3 million, or even $10 million. Remember that most people sue for $1 million or more. If you have high-valued items, you will want to schedule them on your homeowner's policy. These include things such as jewelry, watches, furs, tools, computers, and securities. To schedule your valuables, you will need a bill of sale or an appraisal. By scheduling your valuables, you will ensure that these items are under this special form. So if you drop your camera and it breaks, you're covered only if you scheduled it. If not, then you're out of luck. Once you've made up your mind on all the coverages that you want on your policy, the costs will depend on two variables. First, there's the premium mode, which is the amount of money that you will pay monthly or at another interval. An installment fee will be added if you choose anything else other than annual. Then there's your deductible. If you have a covered claim, the deductible is the amount of money that you will be responsible for before the insurance company begins to pay the claim. The higher the deductible, the cheaper your premiums will be. Make sure that you pick a deductible that you can afford to come out of your pocket at the time of a claim. Now let's focus for a minute on what's not covered. The biggie is damage caused by floods and ground seepage. A separate policy is needed for flood insurance. This coverage is only provided at actual cash value and will not pay to rebuild your home. New Orleans is a perfect example for the need for flood insurance. A homeowner's policy does not pay for damages caused by flood waters. I'd like to finish up with everybody's favorite topic, saving money. Yes, insurance can be very expensive, but there are certain steps that you can take to keep your costs down. Here are some of the discounts that consumers should look into. Most insurance companies provide a home car discount if you buy both your homeowners and your auto insurance from the same carrier. This can be worth up to 15 to 20%, and that's definitely something you'd want to look into. If you have an alarm system, your insurance company will provide a discount. If it's monitored, the discount will usually be deeper. Maintaining good credit is another way that you can save money on your homeowner's insurance. Many insurance companies believe credit is an indicator of future potential loss. It's up to you to check your credit report for errors and to keep up with your payments in a timely manner. A clue report is something else you'll want to look into. The insurance industry maintains a claims history database called the Comprehensive Loss Underwriting Exchange, or CLUE. Companies use this data to help gauge the insurance risk of potential clients. If a home has extensive claims or water damage, then you may want to keep looking at other homes because you could be paying too much to insure your new home, if you can obtain insurance at all. A final word of advice: once you own a home, you want to be careful about making claims against your policy. Frequent claim activity, even for the small stuff, can be grounds for non-renewal and/or increased premiums. A good rule of thumb is if your claim exceeds your deductible by less than $200, you should consider not filing the claim. While you will be paying for the loss out of your own pocket, the expense will probably be less than the premium increase you will suffer later. Remember that insurance is for the big stuff and not the everyday home maintenance. You get what you pay for, so don't be penny wise and dollar foolish. Thank you.